Welcome to TheoTrade. This is Don Kaufman. Here we are, August 21st, 2017, just moments prior to the cash close with the S&P futures, well, massively unchanged in today's trading session. A lighter day than we have seen in some of the recent sessions. Nevertheless, big time bifurcation in markets today, and I'll explain that here momentarily. Once again, we have the levels on our screen, and these are really definitive risk markers. 2438, obviously we did not hit during today's session. Down below, once again, 2411, which, hey, we made an effort to crest down all the way to 2415 today. We really thought we were actually going to see that 2411 print. But let me show you a couple of aspects in today's markets that are really driving the market. So we tried to rally what appeared to be a number of times. There's the closing bell. We tried to rally a couple of times during today's trading session. It's the financials, once again, that are really holding us back. I mean, one thing I want to point out, whether you trade intraday or not, if you take a look specifically at the XLF, it's down, it's just a whopping, 7 cents. But you need to have the perspective that the XLF, being one of the largest market caps in terms of sectors, being down 0.3%, is not going to allow the S&P futures to rally. So look at this, if you will, as this lead weight around the market of the S&Ps. Even if some of the technology sector starts to rally, which we started to see kind of late in the trading day, Facebook started to get bid back up over here. That doesn't matter. Again, it's the financials that drive a huge amount of the order flow. And if you look at the financials lately, I mean, they're a bit of a sick chart in terms of the breakdown here from now we're looking at 25 half right into the 24 half, a full dollar that the financials have come in. But there's one really, I guess, preeminent idea I want to throw out to you this evening. Again, in a marketplace that was rather dull throughout the day, a little bit of lower trading volume. We did see the bonds get bid up very slightly throughout the course of the day. They're up 10 ticks, but oil, of course, came off. But again, there's one overwhelming and overriding kind of theme, and that has a lot to do with a handful of the technology stocks out there. I'm going to key into and start specifically with Google. Now, many of you guys know that tune in on a day-to-day basis. I am not much of a technical trader. I'm a much more quantitative trader, but I don't care who you are. This is a fairly scary looking chart here in Google, because you have to realize Google coming into right in the neighborhood of where it's closing, which is 920. Anything below this, and at that point, we're off to the races. It looks like it's going to free fall. Google clearly capable of driving order flow back to the Nasdaq and the S&Ps. That's an underlying unto itself that you absolutely need to keep an eye on, okay, the days to come. Sure, we could bounce back up a little bit, but I'm going to tell you right now, if Google bounces at all tomorrow, I'm going to look to sell into it and take a short position. Most likely the type of short position I'll be looking for will be shorter duration, somewhere around these 18-day expirations, and I'm going to build something like an in-out spread. Now again, for this to occur, for me to want to build a short position inside of Google, I'm going to want to see Google rally. Okay, what, $5, $10, and then I'm going to initiate a position similar to buying in and out spread. Like here's a $2.50 wide put spread for about $1. If you don't like a $2.50 wide spread, again, widen it out. Use, $9.25 like $9.20. Again, I'm going to let the market rally. I'm going to let the market ultimately come to me. Hey, what if? And everybody always asks this question. Well, what if, Don, we come in tomorrow and Google just decides to break down? Okay, and the answer is quite simple. Well, then the point of the discussion, I guess it's a moot point over there. Google ultimately breaks down. You're watching this video at night anyway. The market's not open. You would need the bounce to be able to get the position on. But Google at this point looks, well, fairly intimidating. I mean, for the most part, it looks like it's dangling off the edge of a cliff. And if you are a market technician, some of you guys will call this like a neckline over there. Call it what you will. It also exists inside of Amazon. Amazon is not dissimilar in respect to what appears to be coming into a major level here. We'll call it right around the 950. Okay. So we have two of the behemoth market caps that are ultimately sitting in what I call kind of dangling off the edge of a cliff. Any bid back, any rally back in Amazon, any rally back in Google, I would look as an advantageous opportunity to try to short. You know, I even looked into this in Apple. Apple has its own, issues going on over here. Still a stone's throw, though, off all-time highs. Now, I'm going to take you to a slightly different area, something I was talking about quite readily in today's chat room here at TheoTrade, and that had to do with a scan. So I'll knock out all these scan categories, and I'm going to take you directly into some of my thought process. Over the weekend, I read an article that I thought was interesting. It was some statistics out there, and the statistics ultimately said, right now, we all realize that the S&P 500, again, it's just a stone's throw off all-time highs. However, there are currently more stocks in the S&P 500. So I'm going to drop in here, scan in S&P 500. There are currently more stocks in the S&P 500, trading ultimately at 52-week lows than 52-week highs. So I went under here under price performance. You can look at near highs, near lows. Within 3%. Well, I decided to knock this down to within 1% of a 252 trading day. Instead of high, I'm going to put in low. So what we're looking for is anything, and I'll kind of enunciate this, anything trading in the S&P 500, within 1% of a 252. And by the way, 252 trading days, that's 52 weeks, And we're looking for, again, the lows. So you can run quick scans, and in a matter of just a few seconds here, you can start to ascertain, all right, there's 30 underlyings that have come up that are within 1% of a 52-week low. Just switch this then to high, and I came up and 30 underlyings populated. This morning, it was slightly tilted towards there were more stocks making new 52-week lows than new 52-week highs. However, when I started into this and started looking what was ultimately making new highs, many of them, people, start to, build your own scan over here, like Procter & Gamble, Many of these underlyings are thought of as defensive stocks. There's a bunch of energy stocks in here, and I'm not energy in terms of coal, but like electric stocks and so forth, utility type stocks that are also listed in here. It's fairly intimidating when you see, the S&P 500 and these 30 stocks that are making new highs, but the stocks that are making new highs are defensive plays out there. In terms of the stocks making ultimately new lows, most of them happen to be retailers. No surprise there. Ford is on the list. I've actually been relatively bullish in Ford because of its dividend. So some interesting, statistics kind of thrown at you, but we can make these ultimately all relative by just quickly kind of sorting them, making new highs, making new lows over the last 52 weeks. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.